Well, Q1FY25 has shown that secured versus unsecured lenders have seen a marked difference in the growth as well as pain in the books or asset quality. Let's start with the segment seeing maximum stress, that is the microfinance. Now, microfinance is unsecured small ticket size loans which are extended mostly in the rural as well as semi-urban areas in India. We had highlighted in May of 2024 that rural market has come under stress. Q1FY25 performance of the lenders focused in this segment showed further deterioration in their asset quality. So, the gross NPA and net NPA in absolute value increased by 26 to 27% on a sequential basis, while the loan growth also slowed down. It came down to 1.8% quarter on quarter for players in this segment. This also impacted their stock performance. So, from April to now, majority of the lenders have given a negative or lower returns. In contrast, the housing finance sector has seen growth coming in with lower NPA net additions. So, AM or asset under management growth in players for housing finance sector has been around 3.2% quarter on quarter, and if you remove the LIC housing finance number, the growth has been more than 7% quarter on quarter. So, growth has come in at a cost which is cost of funds, as calculation shows that 27 basis point decline on a sequential basis is seen with respect to net interest margin on a YY basis, and about 24 basis point sequential decline is seen in their net interest margin. Now, provisions have been lower for them, leading to a marginal growth in their profitability sequentially. Returns have varied amongst lenders from as low as around 3% to as high as more than 60% for players in this segment. Now, the best segmental performance amongst NBFCs has largely been in the commercial vehicle finance segment. AM growth has been around 5.3% quarter on quarter for players in this segment. So, Q1 is seasonal in nature, hence there has been marginal deterioration in their asset quality, but it's remained under control. Gross NPA in value wise increased by 6.4% quarter on quarter, but if you take a look at the ratio, it's increased by only 4 basis point quarter on quarter. Net NPA in absolute value increased by 9.5% quarter on quarter value wise, but as a ratio it increased by only 6 basis point quarter on quarter. CV finances have given healthy returns from April to now in the range of 15% to 37%. Cholamandalam on a one-year forward basis has become the most expensive or valued firm amongst NBFCs. In fact, if you compare all these performances with the Nifty, the index has seen only 11.5% gain over here from April to now. So, let's take a look at some of the other highlights in this segment. In last 5 to 5.5 months from the highs, Nifty has given a negative return of around 1.9%, while Fusion Microfinance, Jana Small Finance Bank, Ujjivan Small Finance Bank and many other players focused in the MFI segment have given a negative return of more than 20% on an average. Secured lenders, on the other hand, have largely given single digit negative return between -6 to -9% from their highs. From the lows, Nifty has given a return of around 17%, while MFIs have largely given return of less than 11% except for ESAF Small Finance Bank. Secured lenders like Cholamandalam, Awas Fin, Home First Finance, Shriram Finance as well as PNB Housing has given robust returns of anywhere between 38% to as high as 67%. So, from the above analysis, it's clearly seen that in the recent months, investors have favored secured over unsecured lenders in the NBFC space. Unsecured lenders get better margins and return profiles during the good cycle, and vice versa. When the cycle is bad, it impacts their growth as well as deterioration in their asset quality. Housing finance is doing good. Focus of the government is on Pradhan Mantri Awas Yojana 2.0 as well, which should augur well for them. Commercial vehicle segment has performed the best when compared to other sectors on various parameters.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them. and how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC-TV18 and CNBC-TV18.com.
For more news and updates, all you need to do is follow CNBC-TV18 on all of our digital platforms.